All right, welcome everybody. Testing 1, 2, 3. Testing. Happy new high day. It's a new high day. Not only is it a new high, but it was a great a move out of Tilray for us, and for many of you that get the thoughts and observations. That was a nice little trade, little pot stock. Pot's gone global. Hope we've been posting a lot of different things on YouTube and starting a little chatter there. We've got some great feedback. In fact, going through stock analysis for everyone. So what the purpose of today's session is to talk about a combined Algo 17 as well as Pug members. And for Pug members especially, we're going to have another announcement next week and another little product that we're going to be adding for you guys that is an indicator for trailing stop functions and determining profit targets. It's something that I want to get complete. So you'll be watchful for next week's presentation. So today we're going to go through some extreme dynamic changes. I think everybody will love today's presentation and what we've done on the Algo 17 and what we intend to do for, of course, some upcoming changes. So I think that you guys can get prepared, get your head wrapped around this. There's a lot of work going on behind the scenes. In fact, the Algo Optimizer booklet is instructions being updated as we speak to reflect some new changes. And some of these new changes, I'll tell you right now, it's like, it's not that we had an epiphany. It's just that, well, we've taken something and tried to make it different versions to allow everyone to have better usage out of optimizing, and not only that, but creating trade strategies and trade systems for themselves. Now, what happens when you buy a trade system? Market dynamics change, ATRs change, and systems don't work. And then you're stuck with something that doesn't work. Well, what we've done is allowed you to maintain a product and adjust your strategies for dynamic changes in market volatility, namely ATR. So why do I have Thinkorswim up right now? All right, well, it's real simple. I just thought I'd tell you that we have our PPS buy signal up, and I just thought it would be interesting just to bring this into focus. When I hit the scan, this just tells you the strength of the overall market right now. Where is the strength coming from? And by the way, right now this week, if today, Thursday the 20th, was Friday the 21st, and if the world was full of sugar and spice, then I don't know how that phrase goes. I know how the other one goes. If my aunt had something, she'd be my uncle. But anyway, maybe one of these days someone will email me how that really nice version, if then, happens. What I'm getting at is this is a very broad-based rally. A couple sectors that we haven't seen produce is starting to show systematic upside in some, not all, but some energy names. We've got high PPS weekly buy signals in energy, which is nice, some machinery, which is interesting, and again, something I wanted to see was biotech, but not as much in biotech. One of the things that you'll notice here, as we scroll down the list, we do not see, we have a few semiconductors, not a lot. Xilinx, which we picked out in the trading room for you guys yesterday, right? Xilinx. That's going to generate not just any buy signal, but I think a weekly high close doji. This is dynamic, but it also demonstrates that it's a stock picker's market. It's not. You'll notice that how many financials are populating on this screen. Wow, I don't see any textile apparel, trading companies, machinery, industrials, aerospace, defense. Gee, John, I don't see any weekly buy signals, and that's what's missing. So anyway, a very dynamic market, and I just wanted to say that for this market, it is pretty crazy how we are seeing gap up, gap down. We go from a week and a half ago, and by the way, this is what you have in your front of your screen is now a spider 60-minute chart. It's got an average true range of the default settings of 14. This is TradeStation. You can change your ATR. If you right click on that format, you can change it by going to inputs and change it to 14. And that way you can change it to 10 if you'd like. This is what Wells Wilder, when he first came up with it, and so everyone follows that formula. You can alter this to 5 period. I do 10 because I don't know. Wells was more of a commodity trader way back in the day, and I think you do need to adjust for ATRs, and it's a very important part of our trading concept, because if you have a wide range market environment, you have to adjust your stops, you have to adjust for your profit targets, and that's where we go through periods of expansion and contraction of volatility, and we've got to be aware of that. And I always talk about that at every presentation that we do. So now, how does that relate to the Algo 17 and what changes, and why did I say this is exciting and you're going to be doing backflips? Well, let's just get into that, right? So first and foremost, let's go to Format Strategy, and you'll see that I've got Person's Algo Strategy System 17 Extreme V2, version 2. All right, so let's go to Format, and let's get into it. What changes are here, and what changes make sense? So let's go a couple of them, all right? So first and foremost, we've really kept everything the same. Position calc methods the same, money management strategies, trailing stop function. If it gets near 80% of the max intended profit target, trail my stop. Scale out ratio. Should I be scaling out of everything? What's the more profitable approach? When you optimize for a scale out ratio, it's telling you, and once again, let me just go and share with you what I'm referring to. If we optimize 0 to 1, and we jump rate of 0.1%, and we hit OK, and that is going to give you a scale out ratio. Should you be scaling out of 10%? And if it is, maybe trailing it, it's trying to give you the best profitability. Just go and hear me, and I'm just going to build this with you right now. And today's presentation is showing you what's going into your hands. Now, so it shows that as I optimized, as you can see, it reduced or eliminated in this particular, and I haven't done anything. I haven't optimized. I haven't built a system. These are just kind of some default settings. So don't rely on performance. I haven't created a strategy or back tested it or anything. I'm just going through how to use the product and how to integrate the new changes that are coming and are here. So I can click on the performance strategy report, or more importantly, my optimization report. It's this little button with what looks like a calendar at the upper left-hand corner with a couple coins. And if you take a look at that, it will tell you basically if you want to be scaling out of some, none, all, 50%, what's the best, least, worst performing, profitable. And sometimes you get a profitable situation and sometimes you don't. And you can make a determination, you know what, if it's telling me to get out of 10% of my position up front, maybe I just don't do that. It's not really a big thing. Anyway, that's how you utilize, folks, your optimization report. Now, once again, I haven't optimized anything. This isn't a workable file. Let's just go start from the top and work our way down. What has changed? Many of you know, in order to tell you what's changed, let's tell you what you get. And many of you are already aware of this. The first thing that we get is a profit target, which is be the blue line, your initial risk, and then again a trailing stop function, and it would trail the stop. And as you would see, this little red line up there was a trailing stop feature, which is built on last conditional change. You see these white lines in the sand? Those are the last conditional changes. So we have a last conditional change stop function built into the market. Now, with that said, what we have created was the idea that, you know what, last conditional change is based on what? Price. By the way, what is average true range based on? The movement of price over time. Okay, so it would make sense that last conditional change, this bar's low, should be out of harm's way. There's an old tool many of you are familiar with. It was Wells Wilder's parabolic SARS, if you're not familiar with it. I'm going to right click. I'm going to insert analysis. And let's go to, to be honest with you, I don't know if it's under Wells, Wilder, parabolic, or SARS. It's under one of three of those. So let me double check. There it is, parabolic SARS, stop and reverse. What is this based off of? It is based off a percent change of the average true range. And so it is a function of reverse and stops. The blue lines help people, and some people may use this function as a indicator to reverse if they were long, and the stop and reverse SARS goes from blue to pink. It would generate a sell signal. And as you can see, it starts off, and it's very interesting concept as far as looking at this, which is something I don't know, I think it's in the first book, but I don't want to tell you we write about everything. But some of the important things that looking at compressions of volatility and putting your stop out of harm's way. Now, let's take a look-see, just if you humor me, at this one setup in this one trade. All right, so I'm going to just expand upon it. Can everyone see this clearly? As this trade is initiated, a PPS buy signal, it was short, it gets out of the short, it reverses. All right, as it initiates a new trade, based on the parameter settings, that would be the initial stop loss, the red line. However, SARS has got a listing way down here, that blue line. If you're adjusting for a position size and you say, if I'm going to get into this trade, I want my stop on the red line and I can get into so many positions. If you use parabolic SARS, then you're defining your risk as the blue dot way the heck down here near the older last conditional change white line in the sand. Okay, by the way, there's your SARS. This trade with our method, what's in your hands is based on that red line of risk. SARS, people that use SARS is basing their initial trade off of the SARS dot. I'm not a big fan. It actually kept your stop out of harm's way. I get that, but it increased your risk a whole lot. When you're wrong, it hurts. And when you're right, your reduction of position sizing is another factor that people would calculate. So I'm not saying that it's not a perfect indicator. It's got some flaws, but if you notice that almost every time our last conditional change, at least on this trend development, is almost at times worked better than SARS. True? So at this point in time, we have the last conditional change and we have a market, the support or the stop out entry, is that red line. So whether it was SARS or our indicator, it got stopped out right there. Everyone see that? So to me, I'm sitting here going, and I know that we had a lot of requests for people to say, hey, person, can you do something to adjust to give us a some type of for position size trading? Can we do something to maybe have, and there's popular terms like a chandelier, which is I believe Chuck LeBeau. You can Google him. Never mind the fact that he's in prison for I don't even want to tell you what he did, but you'll figure it out when you read his thing. But in any event, what he did is he defined ATR and had a formula for having stops way out of line. What I felt was more important, and discussing with Ben, is that while we want to keep things out of harm's way, what's better, the parabolic SARS ATR composition or last conditional change. And sometimes they integrate pretty close to the same. So when the market initiates a trade, we're using last conditional change, and instead of SARs or we're using a function of ATR. So I'm just giving you an explanation of how people use stops and what the new technique is going to integrate. So I'm getting rid of this. I'm going to remove that, and we're going to still use ATR because that's down here. That's important. So what did we do? What's different? Format strategies. We gave you an option. We've included an opportunity. And what we've done is we have the basic use JP last conditional change. 0 is false, 1 is true. And now we have a different variation. It's called dynamic exit. It takes an average of the whichever is the greatest or less than. It takes the average of the last conditional change or a function of ATR. And if not SARs, but a function of average true range. And so that gives you a dynamic exit, and whether you want to use it gives you a choice. And now if we hit 1 and we go over here and hit OK, you'll notice that the SARs would have been a lot lower, right? It was way down here. And now if you take a look at the white dots, they're just a little bit further, right? They're still giving you a choice of exit. And in your back test study, you may find that the new version gives you a little bit more room, but tightens up the stop a little bit from the beginning of the trade. And that may help us to define our position sizing a little bit better. If we have a reduction in the risk, but keep it out of harm's way, you may find that this would be better for A, maybe day traders, and B, swing trade to position traders in equities. That's one of the most notable differences of what we've added. It's a very dynamic function. The next function is insane. It's going to be explained, and this is a compression exit. What this does, it also uses ATR in the fact that we can see if the average true range in the S&Ps is 99 cents, despite the fact that you have a risk reward, despite the fact that you have a max profit, we use a compression exit function to add ATRs, whether in this case you can go back and optimize whether starting at less than an ATR or greater than an ATR. And in this case, let's go to something really ridiculous like 10 ATRs. If the ATR is 99 cents, that means it's a 10-point. We're looking for this thing to expand at 10 points. And no matter what happens, if we get to a 10-point ATR and you haven't taken any profits, this thing's going to do that. It's a customizable exit based on fluctuations in ATR. So let's go and look at a jump factor of just 1. So we're going to change this from 1 to 10, and we're hit OK. And we're going to hit OK, and we're going to optimize this out. So we've really taken a choice for individuals to say, what option do I want to use? What works better for me? And in this case, as you can see, it gives the same type of setting, unless I did something silly by like not turning off the original function. Hold on a minute. Yes, I turned, it's still working, and I got to change that to 1. There we go. And let's hit OK. So this still gives you, and I doubt you'll ever get a 10-period ATR, but this is an exit strategy function that will help give us a definition of times where we get an expansion of ATR, which, let's face it, a 212 ATR, a 14-period ATR of 212, that would be a 20-point move before it took a profit. It's not gonna happen. So you will optimize this, and that is a function that we're building as an indicator, by the way, this compression exit. So think of this, section 4C next week. VIPs, you're going to be looking at this as an indicator tool for you that you can use to change manually your ATR and your compression or exit strategies. So for Algo 17, this is today a combined class to tell you what's changed with Algo 17. More importantly, what is VIP guys who don't have the Algo strategy doing? We're combining a tool that is built into Algo 17, but also developing as an indicator for exit strategies. It's really going to be extremely cool, extremely dynamic, and I mean that too. This is really cool. So it provides a really an enormous amount of better results. So I wanted to show you what the big change is. Better stop functionality, opportunities, lots of opportunities for you guys to back test, and given a choice rather than shove last conditional change, which I still find better, at least in back test studies. But if you want to expand the ATR and define your risks for maybe volatile stocks, for stock traders, if you wanted to develop a better strategy for crude oil, which tends to go from 0 to 100 in volatility, right? If you wanted to expand your stops, then, or at least compress or expand on your profit targets, this is the tool that's going to help you do that. So that was, I think, one of the more dynamic, and I know we illustrated this when we were on the cruise to our members that joined us on the cruise, and I just wanted to make sure that you knew that this was coming down the pike, and it's going to be in your hands very shortly. Next, let's take a look. Do we have questions there? Anyone got questions right now? I'll give you a chance. I don't see a question, but if you have a question, type that all in. That would be pretty cool. So next, let's take a look at the next function. Stop loss ticks didn't change. Take profit ticks. What does that mean? Well, if you've got an idea that the market sometimes gets to the profit target and it doesn't fill you, you can change your profit ticks and you can optimize that out instead of getting right to the objective of the market. A lot of times it's really weird stuff like that happens with our program. Reverse signals. What does that mean? If I'm short, don't take a new trade until that short it totally expires its criteria. I don't want to just get in and out of a trade the direction of the market. If I've got a trailing stop function, I don't want it to reverse until maybe it tells me that my trade that I'm in gets me out. So that is the reverse function. It never changed. All right, buy signals. If you guys remember, the very first version we came out with did not allow us to integrate risk-reward ratios on buys versus sells. Now think of this. Markets go down a lot faster than they go up usually, except for in the case of a melt-up market like today. That's number one. Number two, bull markets kind of behave differently than bear markets. So if that's true, buy signals kind of work differently sometimes than sell signals, and risk-reward ratios are a little bit different. Now, buy signals. A PPS buy signal, it's a proprietary function of momentum. There's about 10 things that go into that have to happen for PPS to generate a buy signal. I think there's no question about its relevance, its work, and its performance. Now, with that said, we develop a buy-only program. Okay, let's break it down to, I'm going to develop a system. So let's start with buys only. So when you start to build a strategy, let's say it's only long-only strategy, stocks, for example. I only want to take long stocks, fine. I want to be long Apple. I want to take long signals in Amazon. If the market gives me a daily buy in crude, only take buy signals on a 1 minute, a 3 minute, a 5 minute. You see where I'm going with this? You can develop your strategy and your performance. But should we have a filtering mechanism for buy signals? After all, we probably shouldn't take every single buy signal, right? And here's an interesting thing. Sometimes the market gets oversold, and if it's in a daily sell mode, maybe you want to take buy signals and look for snapbacks, right? So for a scalper and for a day trader, you may want to take buy signals in a counter trend trade to the higher time frame direction. Makes sense. I know it does. So what's the filtering mechanism? Well, not only do we did not change the breakdown of the risk reward ratio, which allows you to optimize. What's the best risk reward ratio? Sometimes it's 3, sometimes it's 1, sometimes it might be less than 1. It could be 0.5. And then you have an increment of quarter point jumps. So, I mean, that would be less than 1. That would be half, risking, again, $1 to make 50 cents. Now, we don't like those type of setups, but if we have a trailing stop function, it would get out of your initial profit quickly, especially in a low ATR environment. Those are kind of things that we would, maybe you can at least optimize for that minimum objective, something people don't think about, but it's available to do. Next, moving average confirmation. What we thought to ourselves in the when we released this product is like, you know what? What if, by the way, we get a lot of PPS for stock traders, for end-of-day traders. You know, you get a lot of PPS buy signals and they're below maybe a 10-day moving average. You get a PPS buy signal and it's below a downtrend market, and they're not the greatest buy signals. So we added a moving average confirmation, and that you could optimize. Do you want to take a buy signal on a 2-period moving average up to, I don't know, whatever you want to go with. You can go with a 60-period moving average. And then you can do maybe a jump rate of 2 just to kind of get down and find out what the smoothing average of a buy signal above a moving average. But here's what we did when we came up with that idea. We only based it on a simple moving average on the close. A simple moving average on the close. Now, some of you may be aware of this, and some of you may not be aware of this. So let's do something just a little bit that might be interesting. Let's go and take a insert and analysis technique, and let's take a look at a moving average. Just a simple moving average, if I can. And I'm going to hit OK. I'm going to go the price based on a close. How about I do it based on the HIGH, and I go, let's go with the length of 10 periods, let's just say. Let's make that color fuchsia, and let's make the scaling or the style and make it a little heavier and see if we've done this. And there it is. So what have I done? I've got a moving average of the high. Maybe I want to filter this out, and I only want to take buy signals, a PPS buy if it's above a moving average of the high, instead of a moving average of the close. So let's take a look and go format this, and let's go input and change high and go close. Did I do that right? No. CLOSE. Boom. And hit OK. All right. So a 10-period close is a little bit tighter, and a 10-period high might find filtering and giving you a better chance. Now, I'm not saying that 10 is the right combination in this because we didn't optimize, but it's about opportunities. Now, why would I want to say only take buy signals if it's above a moving average? Well, it may help filter out taking a false buy signal. If we got a sell signal below the moving average, cool. If it's a buy signal above the moving average, better. But if it's a breakout strategy, wouldn't we want to break out above X periods highs? And wouldn't maybe taking a breakout of a high moving average might be a little bit better confirmation than the close? Does that make sense? That is actually defining, give me, maybe let's go with, and tighten this up because this is a 60-minute, there's only 6.5 bars, 7 bars, let's call it, per day. And maybe you want to tighten it up. You can optimize and you'll find out. But sometimes you might get a buy signal that's not above the moving average of the close. It may give you a false breakout, and it may help to avoid taking longs when the market does not break out above a moving average. A breakout system is what? It breaks out above highs. So wouldn't it make sense to have a moving average of the highs? What do you guys think of that? DASS, this is not think or swim. This is about our Algo 17 and our PUG members. I'm giving a breakdown of a product that we have to build strategies and to build an automatic system. Okay, so I just showed you what our PPS indicator is revealing for. So if you, just to let you know, this is about our PUG membership, and you're invited to stick around. And I'm definitely thinking you'll learn some things here too. But I do have TOS. We shared that before. However, this is not a product that is anywhere remotely close to being available on TOS. The only thing that's available on TOS, DASS, is, again, our PPS, our PMC, and persons pivots. This is a strategy building algorithm component system, okay? It's called Algo 17. So it allows us to format persons algo strategy. And so what we're doing is we're going through the new changes. And the new changes is simply this, gang. If you wanted to change, I want to take and you want to develop a long-only strategy, a long-only system. I would say, first and foremost, the first thing that we're going to do is long-only. And I always suggest when building a system, the first thing you do is start with long-only, right? So then start with shorts. So you may find that you'll get different parameters. Build up on the longs, then build up on the shorts, optimize, see where your profit factor is, look at your ratio of success, wins versus loss, and then you'll kind of be able to build up a system. As things change, as you can see clearly at the bottom of your page here, you could clearly see what changed in the market. We had from April 12th through pretty much May, we had an ATR of about average 70 cents. Maybe, I guess you could call it 60 cents. It was a little bit higher, a little bit lower, but it's pretty much stayed right in that trading range of 70 cents. From about May, as we broke out, you knew that you were starting to see an expansion of ATR. And we went again into 2 weeks of trading in May. ATR has expanded greatly into 220. Holy moly. I mean, if you think about it, that's almost 4 ATRs greater than, 3.5 ATRs greater than. We went almost 3.5 ATRs greater than at one point than we did for a whole month right here. And that was based on fear and selling. So when you start to see your ATRs expand day to day, whoa, you need to start to modify and maintain a strategy because your risk factor, as the ATRs get wider, as the trading ranges expand, you're going to have to increase your stop levels, and you're going to have to probably increase what? Your profit targets, right? Or trailing stop function. It means the market's expanding into a trading range, which means it's generating more distance in one direction. ATR doesn't tell us which way the trend is going. ATR tells us that the market's expanding in its trading range. All right. So if we're building a system, gang, we want to have the availability. This new function, PPS buy, I want to take a PPS buy with confirmation of a moving average. What moving average? A 5 period? What kind of moving average? Is it based on the high, the low, or the close? All right. Well, this is confusing, and this will be in your written manual. That's the written manual. I was tapping on it. We're working on it. The PPS buy moving average, right? Here's the neat thing. You know, I've just done this webinar. It's being recorded. I got witnesses. You know that you will be getting this. I can't take this away. Why? Because you're seeing it in front of you. This is a real product. It's been beta tested. I'm beating it up, and we should have everyone's files created by the weekend, and that's no joke. And this should be in your hands, if not Sunday night, Monday after 12 noon, at the very latest after we do our Monday morning briefing, et cetera, et cetera. So just the thought you'd like to know, This is not something that's got to be developed 4 years from now. This is done. It just we need to put out your everyone's user ID. So here's the neat thing: the moving average price. We have moving average confirmation. If you want to go, do you want to use a moving average confirmation? 0 for no, 1 for true. Okay. If you are going to use that, what is the moving average for your price? So if you go 0, you're not using a moving average confirmation. If you want to maybe filter out your buy signals and you want to use a price, you don't have to type the high in. You could just type in, if you want close, go with C. All right. Now here's the confusing. We didn't change this for low. There's the low, L for low. You can also type it in. We've given out 2 functions. You can either type in H, L, or C, high, low, close, and a moving average function. So with that stated, there you have a moving average confirmation, 0 or not. You can, if you have this set at close, and then you say, yeah, I want to use that, and you optimize, okay? You optimize this. Now you have to have what your time period is. At least 2-period moving average up to, I don't know, you could probably go 60 if you really wanted to get crazy. You could go a 200-day moving average if it was a daily chart. So you can say, I want to look for a trading strategy that filters out to buy or sell signals on a market day in and day out, whether it's a high beta stock to the market, like right now Microsoft, a large cap stock, like an Apple is currently. It's a little lower than a 1 beta, but with that said, you can develop a trading system that filters out buy signals a little bit better if you want to use the moving average component based on a close, or you can use quote unquote, and I thought this was really neat, why don't we add for a breakout, if you were looking for a breakout, moving average of the highs. So we could have and add a moving average confirmation. You can optimize this, a moving average of the highs, and we can go, let's go with maybe 2, and let's go with maybe 20, and increment of 1, and let's just let it rip. We're taking a moving average of the highs. That's all we're doing. Let's turn off the sell for right now. We'll get into that in a minute. Let me turn off. I haven't even gotten through high close doji. Wait till you see what we've done with the high close doji, gang. Sit tight. Now you can optimize. So we're just looking, we haven't built in a risk reward ratio. We're only trying to filter out what is the more profitability that gives us, and then we can work on our risk factor, of course, what your stop loss levels are. But if you have a buy signal over time that says, hey, only take buy signals if it breaks out. What are the results on this little, and again, I'm not here to build a strategy for you. I'm just showing you the capabilities. The buy signal 1 showed at a risk reward ratio, a 9-period high, a 9-period optimized better for more profitability, a 9-period high in this situation. All right. If I was going to develop a strategy, I want to then go, what's my max loss? What's my max profit? And I want to do a little bit more. Should I be going trailing stop, and which trailing stop? So I can really be efficient and get more nitty gritty. I'm not saying to get too many criterias, because we don't want too many criterias. We just want better options, right? We want alternatives. That's what I want to give you. I want to give you the power of alternatives. If you said, gee, you know, it would be nice if I could only take a breakout strategy. What's a breakout strategy? It's got to break out above the highs. That's a breakout strategy, right? So if it is a breakout strategy, then get buy signals above a high. What's the best profitability? I might have my own ideas. Maybe it's a 20 period. This thing said 9. Now, the spiders will be different than crude oil. Crude oil will be different than E-mini S&Ps. Corn will be different than silver. So depending on the market that you like, based on if you're a commodity trader, an equity trader, and you wanted to build a strategy and do research to find out what's the best signal, this is what you have now. It just absolutely takes it light years ahead of anything that we've done in any other version. All right, questions there. When do you get your hands on this beauty? No later than, I will have to tell you honestly, we got to go and create everyone's file, and that requires a little bit of work. If it wasn't for President Trump, no offense, God, make America great again. I get that. If it wasn't for President Trump and tweets and Jerome Powell and option expiration, it would have been probably yesterday. But the fact that this is a kind of a three-trick pony horse show over here with Ben, myself, and Mary, and fund management and everything else that we're doing, you'll probably get it Sunday, if not no later than no later than after 12 o'clock Monday. This Monday, not 20 Mondays from now. This Monday. All we got to do is just create the files for everybody with their your account number or your user number. Okay, that's it. Done. Boom. It's not, like I said, and that's the easy part because everything else is done. All right, so make sure that's when you're going to get your hands on this. Now, I don't want to create more work for anybody and develop strategies, but if you are looking to say, well, should I be trailing stops more functionally with a higher ATR? Is there a combination between last conditional change or customize your own? Boom, now you can do that. All right, let's move on because this is probably a single most important element, the most, I think, crucial element, let's just say, at this point in time. And by the way, if you notice here, this thing, it maxed out. I don't know what the holding period on the SPY is, but we could probably say in this, I think it just max trading bars defaulted just out of morbid curiosity. Let's go with 5 and let's go with 60 just for my own. I haven't built the strategy. All right. By the way, we will be providing you, and we are going to develop, and we do have already a workable one, but we'll provide you 2 new workspaces with a strategy. So here's an interesting component, format strategy. Just using as you can see, the dynamics of performance just changed we are only taking, I think, longs, right? A 1.5 risk reward ratio. I hadn't changed that. I haven't optimized anything. So going through the steps here, we've got a buy moving average confirmation of the highs of 9 period for a breakout. Well, that's pretty interesting. And the holding period, if you look here, the holding period max trading bar went from, it defaulted at 20, I don't know why, and this says 9 for a 60-minute spider system. So let's say you overrode that and you said, well, bull, I think it's going to be 60, and you just hit OK, and you just put your own input, hold this thing till hell freezes over. As you can see, you just screwed yourself out of a couple trades, right? So just to put it in that perspective. All right, next. So let's go over here, format strategy. And that's why optimizing tells you without, it doesn't discriminate. It tells you, hey, baby, you want money, profits, 9 periods is your number. It can always get back in. And that's there it is. Now you got a better trade over here, and it max barred out, and we'll figure out what's going on here. All right, now, are you ready? Drum roll, please. A high closed doji. What is a high closed doji? A high closed doji is a pattern that is not a 3-bar morning doji star formation. As this pattern has been one of the most formidable trading systems designed, it told me after a downtrend, that's the key word, after a downtrend, market has to go down. When after a downtrend, we formed a doji. Within X period of bars, right? X period of bars later, if the market closed greater than that doji, it would form a bullish trigger to go long. Your risk was underneath the swing low or the low of the doji, whichever was lower. That, then, the distance between your entry to the low, if you measured that up, about 70% probability you would have within 8 bars, 8 to 10 bars, a 1-to-1 risk reward ratio. It gave a systematic approach to a long, your stop, a holding period, and a profit target. Boom. And that was why the high closed doji is a formidable trading system in a nutshell. Now, we all know that programming a downtrend has been a challenge. But I think you don't call a doji after a rally a high close doji. It's not the same. So, and another aspect of this, if you get dojis in a 5-minute overnight E-mini S&P, every bar is almost a doji. So you didn't have any reflective change in trend in a sideways action, and you had too many dojis occur. So therefore, it's not effective as a system to use all the time. So we needed a filtering mechanism. So to start with, in the high close doji, I mean, if I turn it off, I miss a lot of trades. If I turn it on, I get in a lot of false signals. That irritates me. Okay, so we came up with an idea to help for us, meaning for my own trading, and I think it would be important, and not to be selfish, but to share that with you guys in the high and low close doji function of Algo 17. And we found some really good results in it. That's why we decided to share this in this model. And that's the truth. Now, if you notice there's what's different in this version, look where it says HCD, 1 true, 0 false. Okay, let's turn it on. Let's go and try to build a, should we be in reversals? I don't know. Let's turn that off. Should we take high PPS? I don't know. Let's turn that off. Let's go and find out if we can develop a high and just go with just high close doji. So we're not going to take low close dojis. We're not going to take PPS buy signals, and we're not going to take sell signals. 0 turned all of those functions off. If anything, maybe we will put a little line. Maybe I'll add a line here to separate between buy category and sell category and high close versus low close. That might make sense to throw a little dash line in there. Maybe we'll work on that. All right. Or just get it out to your hands as is. Well, it's not a big deal, I think. All right. High close doji. All right. Risk reward ratio. We'll just leave it at 1. We're turning HCD. We're going to turn that on. True. John, what's this momentum thing? Oh, yeah, there we go. This is momentum. In TradeStation, there is a function of momentum. It dictates between the current price versus the price over time. Is the current price in a high close doji, we want the current price to be lower than at least the last 8 bars. So if we get a high close doji, I don't want the bar to give me a high close doji after a rally. That's not a high close doji. I want, if the market's down and lower over 8 bars, it may be an additional filtering mechanism. So here's the deal. We added the momentum. Is that true or false? 0 for false, 1 for true. And the momentum length. Well, is it 8 bars? Should it be 4 bars? Could it be 20 bars? I don't know. What do you think the answer is? Who knows? Let the damn computer tell us. Let's optimize whether it should be 2 bars or 30 bars, and show me, does it make money? Not 130, excuse me. Let's go with just 30, shall we? Let's just try 30. Is there any profitability in this? So I've got momentum turned on. I've got the momentum length, and we're going to turn that off, and we're going to let last conditional change turn that off, because we just want to know, is there a functional difference between high close dojis and using a momentum function to help determine, is the market making money with high close dojis if the market is higher or lower over the last 20 some odd bars. And in this case, here's an interesting concept. What's the difference between this little buy signal here and that little buy signal there? Well, this one looks like it's below the moving average, and this one looks like it's above a moving average, and it says high close doji, right? Now, I'm not saying this is a great function, but it's a filtering function. Let's go back to format strategy, and let's go to format, and let's say, now I have a second question. should I have in my high close doji? Should I have not just the momentum length is set at, in this case, 19. Should I have a moving average confirmation? Well, let's say, yeah, let's try that. If it's a buy signal breakout, let's go and optimize this, shall we? And go with the high. So just type in H for a buy breakout. Moving average confirmation. Let's try it. Let's go with 1. And what do we want to go with? Maybe a 20 period moving average? Who knows? So I'm just showing you the walkthrough function of what would help us. Is it over optimization or is it filtering? In this case, it is filtering. So in historic purposes, it's not going to define losing money at times. It's going to help at least filter out so that you don't miss trades and say, listen, when I do get that and it meets this criteria, I can trust what the results are. And so in this case, we go to format and we say, gee, did that work? In this case, it has moving average confirmation. We have high, and it didn't give us any results, whether it should be 1 or 20. So we can also change this from and go just as a double check, try close and hit OK. I just want the opportunity to find out, is it better to have a choice on profitability, and is it better to have the moving average function or not? If I don't have the opportunity, I'll never know, correct? So that's the key there of understanding the functionality or having the opportunity to build a better mousetrap. That's all. I just want to know, should I be using, at the very least, if it's not building in a moving average confirmation, we can always change that function, yes or no, by on or off. In other words, if I like high close doji, I want to make sure it's got the right momentum. I just don't want to take a close greater than a doji if it's not built into with some momentum. That's the key. So in that case, I think that's the newest additions that we've had, that it clears up you guys being able to develop more filtering mechanisms, not over optimization, but it allows you to build a long only strategy with high close dojis, if it works or not. Maybe dojis don't work for ETFs. Maybe doji patterns don't work on a 5-minute period. So maybe we have to disable the high close doji function. Maybe high close dojis work better on daily or higher time frames. And how do we change a higher time frame? In Thinkorswim, format symbol, and you may want to change that to maybe a 2-hour average bar, 120. All right. I don't know if you're going to get a lot of dojis out of a 120 period bar either, but how do we not know that if we don't have the ability to back test something? So what's a better system? Buy of a breakout of a moving average of the high with a PPS signal behind it? And how do we take that type of trade? So if I'm trying to build a system that can give me confidence that when this thing gives me a buy, I know what my risk is, I know what my position size should be, then I can say go with that trade. And that's how I can build a better system that I can trust, because we have what? Better filtering mechanisms and the ability to match or at least compete with other sophisticated programmers who have guys doing this stuff all day long. Trust me. So while we can't afford, and for the amount of work and coding that goes in here, it's insane. Start time. I only want to trade if it's obviously a cash market. You have to trade during US Open Outcry. If you're trading the currencies, you can trade the Open Outcry session. You can trade the European session. You can trade a little bit of both. I only want to trade from 2:30 in the morning, and I want to end at 5 a.m. Take any trade in between that. And by the way, I want to start again if the market after 9:30 U.S. Eastern Standard Time. Don't take any more trades after 2 p.m. And in this case would be 1400. So I can actually shift. Hey, I want to trade the open. I want to trade the close. first hour, last hour, whatever your combination is, you can do that. Your position sizing, I can take position calc method. I can go number 1, which means 100,000. I can go position calc method number 1 and change that number to 20,000 if I'm using a leveraged ETF like the VXX. I can change this to 2, and I can also change that and say, hey, you know what? Get me in as many shares as possible. I only want to risk 2% of my portfolio on this trade. If I have a $100,000 portfolio, I'm risking $2,000. Get me in as many positions as this parameter says on that trade. If I'm trading futures, number 3, I'm only taking 2 lots. You can change it to 4 lots. You can change it to whatever you want. So this, between everything that we created, max loss. I don't know what the max loss is on this system. Run an optimization. What about max profit? Sometimes you get these crazy openings. Don't you want to take profits on a gap higher open that just happens once in a blue moon? And if it does, then get me out, punch me out. Fine. There is your answer in this model. And again, trailing stop and scale out ratio. Max losers. Hey, if I get 4 losers in a day on a day trade model, boom, stop this nonsense. Stop trading. Something's wacky today. Exit, end of the day. Do you want to hold the trade or do you want to end it at the end of the day? Either way, that function is right here. Exit, end of the day. Next, you've got your now overall dynamic trade strategies that you can have your last conditional change. You can have a dynamic combination of combining last conditional change with ATR, and that's the dynamic exit, and then the compression exit strategy. And you can expand and optimize for a change in fluctuation of average true range. This is probably the most sophisticated programming ever, in my humble opinion, designed to give users at least a better odds of building a system and break down everything that you would want. If the PPS buy is worth its weight in gold, like I believe it is, then maybe we could filter out and have a better filtering mechanism by employing a moving average. And instead of just having a moving average of the close, if we're taking buy signals, let's take buy signals based on a breakout. And what is that breakout? Well, let's start with a moving average of, instead of a 20-period close, maybe an 8-period moving average, or in this case, as it optimized out, a 9-period of the high. Wow. And by the way, if you're looking for a sell signal, you would want to take a, not just a moving average, a breakdown would be what? I want the market to close below moving averages of a low. Just type in L for low or type in low for low. Those are the new functions. I know that everyone, I told you in the email, you'll be doing backflips at the barbecue. This is not a belly flop. This is not extra work. This helps define your quality signals and your entries and helps you to define whether or not, and again, if you're day trading and you only want to take 16 ticks or 4 ticks or 8 ticks out of the market on a trade, all you have to do is go up here and say, what is your max profit? What is 8 ticks in the market? By the way, if you're trading 2 contracts or 10 contracts, it's your take max profit on the position. So basically, if you're trading the big E-mini S&Ps, and you could do this with the new micro guy, in fact, but your max profit is based, you calculate what it is per tick. So again, if it's $50 per point, which is 4 ticks, guess what? You wanted to take 8 ticks on 2 contracts, that's $200. Get me out at $200. If you want to say, hey, I need to get out 1 tick below that or 2 ticks below that, you can go 250 and then scale out. But the trigger would be 250, and then, or in this case, try to round it to your what your commodity is. So you can actually devise a quick in and out in a low ATR market. In the E-mini S&Ps, for example, for day traders, you adjust your max take profit. There it is. Filtering out your day trades, whether it should be PPS or high close doji, I think is going to improve anyone's system. And by the way, this is probably one of the most advanced, not just for devising a system for automation, but a research tool. This is why this is really cool. Amazing research tool to understand the dynamics of the markets and to see those fluctuations and those changes. So the let's see here. Carlo A. In your, Don says, let's see, let's go back. Ty says awesome, so we start there. In your momentum, you have 01. Should it be 1? It could be, Don, it could be 1, or in the momentum, double check. On the high close doji, what did I type in? High close doji momentum. If you go to optimize this, it's 0, 1, jump rate 1. So do you want to use it, true or false, right? So that's just a matter of functionality of true or false. That's all that was, right? So what do we got? Carlo, when we get the Algo 17, do default parameters are the ones we see in the Algo room daily, John? I'm sorry, you're new with the Algo 17. I've been using toss tools, but definitely got to get my hands on this. Carlo, first and foremost, the ones that we have in the trading room, we create and move with adjustments of when every time we've given out a Algo program, we have given out workspaces. So typically we've given out the VXX a long time ago when, again, a long time ago, it was a few years ago when Bitcoin was popular. I share those settings, so the answer would be sure. Yes. All right. Absolutely. All right. This is by all stretch of the imagination, in my humble opinion. I know that Ruth already made a comment about sounds great. And I got to tell you, Ruth, this is just dynamic. Now, there is one more function that we could do. And if there is going to be any further insights, can you imagine if you take an ATR of a daily chart or a higher time frame and apply, like, for example, a stop basis of not just these bars, right, but of a higher time frame? That might be something that could be worth exploring if you think about it. So if you get like a daily, this is obviously a daily system. We didn't do much with this, obviously. It just changed 60 to daily, and it just populates. Here's the doji over there, and this closed greater than the doji. And obviously we would populate and try to run a back test for this. But in any event, the long and the short of it is, if you have your ATR or your last conditional change, which that's a last conditional change, this candle right there, that's a last conditional change right there. This did not close greater than that. So this is the last conditional change. So if you get a new entry on a short term, would it behoove you to have your stop below a 60-minute swing trade model underneath a daily last conditional change? So if there is anything that we would change from a functionality, it would be an addition. Just a food for thought, using higher degree time frame for lower time frame trades, for stop management, for risk management. I mean, you can't avoid pullbacks in the market, right? What we want to avoid are whipsaws, and what we want to do is filter out, and what we want to get is information. Is it possible? Should we be expanding our profit targets or contracting our profit targets? And if so, do we have that ability? And the answer is yeah, like hugely. I only want to be long only in equities, or when the time turns that we're in a bear market, only take shorts. Okay, that makes total sense, right? And that's what the functionality that you have. That's why we broke up. If you think about it, that's why we broke up the categorization of buys versus sells. Not just the function of, for day traders, again, just to highlight this, guys, if you get a doji every 5 minutes on a 5-minute E-mini S&Ps, the last thing I want to do is take high localized doji. I'm going to get in and out like it's ridiculous. You got to turn that stuff off. You know, and if we have a momentum function and it helps define what the trend of the move is, if the market absolutely has gone up and then we get a low close doji, that's different, man. That helped function. That filtered that out. I don't know if we need a moving average confirmation, but wouldn't it be nice to have the availability to backtest? Should I have a close, or should I have a moving average price based on the low for a sell signal? I'd say a low, right? Anyway, that's our new changes. I know that some of you are going to be just beyond thrilled with this, and more importantly, having better options, better opportunities to discover what profit targets are. And as good as we are with profit targets, who would have thunk that this market would expand up after Jerome, or at least the Fed day on that Tuesday, and have that breakout move, let alone even today. And if the market's in a buy, at least if the system's in a buy, don't be taking shorts, right? So at least from a research perspective, if you got something that's developed and you're a SPY trader, if you're an option trader, hey, maybe right now is not the good time to be selling some call spreads. Maybe now's the time to have exposure on the upside. I'm here to tell you something. It gives a trader an edge beyond belief. Thank you all for attending today, and I hope I shared with you. I didn't overpromise. I thought for sure that everyone would be excited about this, as I am, because this is dynamic and it puts it in your hands, and it is here. And you'll get it by Monday, 12 noon, as I am sure is sitting here, because Mary, my wife, is going to have the whip out. You guys will be having this pretty soon. So thank you all very much for attending. And if you have any questions, you certainly can email me at jperson@personsplanet.com. And I hope I've served you well. It is my passion in this business to help not just benefit myself and my family financially, but for those as well. And this is, as we said this morning in the trading room, if you think I got experience trading in this environment, you guys are nuts. I've never traded in a negative real interest rate environment with full employment, or at 3.4% considered full employment in my books, right? Help wanted signs everywhere I go, and yet the Fed's thinking about lowering interest rates. Are you out of your mind? Holy moly. Anyway, pretty crazy stuff. Thank you all very much, and we'll see you tomorrow in the live trading room. Thanks again, everyone. Have a great evening.